Hi guys, hi everyone. Good morning, good afternoon, good evening, wherever you are. Welcome to IronFX webinars. How you guys doing? Okay, while we are waiting for like everyone to tune in, just a chit chat. Okay, before we start, I was looking at gold just now. All right. Surprisingly today there's no news. There is a bank holiday. But gold has made another all-time high and falling from the like let's just say 4,080. Okay, now it's falling almost 100 pip. We're gonna discuss that later after the webinar. So today, as you already can see on my screen, we're going to talk about the QM or Quasimodo trading strategies. Any one of you guys heard about this strategy? Can you let me know? Any one of you guys? Have you heard about this strategy or this QM or Quasimodo strategies, guys? Don't be shy, all right? Because you're gonna see me every Monday for educational session. Okay. Do you have any like suggestion or the topic you guys want to learn? You can let me know as well. Either you send at the text box or you can send me at the Q&A. Okay. Any specific topic you want to learn more? So I can prepare for November schedule. Okay, I want to get it done by October 15. If you have, you can let me know. Okay, I will add that topic in my November webinars. Okay. Here we just begin our session. Again, guys, good morning, good afternoon, good evening, wherever you are. Welcome to IronFX webinar. So the webinar series today, we're going to talk about QM or Quasimodo trading strategy. And before we start the webinar, disclaimer first. All right, over here. Okay, over here, right? The disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. And risk warning, our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. This product may not be suitable for everyone, and you should ensure that you understand the risk involved. Okay? Okay. So our speaker today, my name is Peggy. I'm an investment analyst and a prop trader. So like I just mentioned, just to get to know you guys, you can just talk to me because you're gonna see me like every Monday. Okay. So this is the agenda for today. So basically what we're going to cover today, what is Quasimodo trading strategy, or the short form is a QM, and how to identify the QM reversal pattern and how to trade with the QM or Quasimodo and live trading example. Okay, anyone of you guys heard about QM? QM? Anyone? Okay, somebody send me the Q&A. The chat box, yes, I know that I don't know why the chat box is disabled. I think it might set by IronFX staff, but you still can talk to me because at my side, right, I just like change to like everybody can talk to me. I will say hello. Do you say that? Now can tap. Can you say hello? Now can type. Okay. Nice to see you, One Chan. One Chan, where are you from? I mean, where are you based right now? Where do you live? Singapore. Oh, nice to see you. Nice to see you here. If it's rare that I saw like a Singaporean join the webinar for the IronFX. Okay, so have you heard about the QM before? Oh, I'm gonna I think I forgot to remove this. This on our basic candlestick, we already know that, okay? Okay, what is QM or Quasimodo trade neutrality? So basically, QM is the at one price action for the reversal pattern. Okay, so it's gonna show you the signal potential trend changes with high accuracy. Can just say like 80%. Okay. Okay. Oh, so someone suggest for a webinar on SAR, you mean Salaboric SAR, it is a super trend. Hengi, Ashi, please. Super trend. Okay, I'm gonna mark that. I'm gonna push this for my November webinar. Okay, let me take notes. Okay, done. Okay, so the key characteristic is that the origin, okay, you're gonna see here, it look like head and shoulder. So basically it look like head and shoulder, okay. It's a modified pattern, but head and shoulder pattern we failed to test. The structures, okay, whenever it will look like this character, you guys know of this character, hunchback. It look like hunchback, okay. So basically they will say that the left shoulder and head and the right shoulder with the neckline break, okay. And I've said that the right shoulder failed to reach the neckline level. So basically, if you're gonna talk about the head and shoulder, you're gonna be like, this is the left, the head, right? And then this is the right shoulder. So basically, somewhere it's been here. It's gonna be the right shoulder. This is the left, this is the head, right? For the QM, meaning that the right shoulder it fell. Okay, basically it failed to reach here. It could be something like that, and then here. So this is kind of like QM. Okay, this is the QM. Consider one of the more reliable reversal pattern. It can give you the accurate, like I would say, not 100%, but 80 to 90% reversal pattern. You're gonna see here, we're gonna call this one is the bearish QM, which it happened at the resistance. Or maybe even like further, this is the bullish QM, something like that, okay? Don't worry, I'm gonna show you guys later. Okay. Okay, like here. This is the left, this is the head, this is the right shoulder. Okay. Okay, so the QM pattern, we have two types of QM pattern. We have the bearish QM and we have the bullish QM. The bearish QM, it occur around end of the uptrend. We know that price on uptrend, right? Bullish, which is price make higher high, higher low, higher high, higher low, higher high, higher low, right? And whatever is the QM, left shoulder, okay, initial high, and this is a higher high. This is make the lower high. Okay, this is QM. Bearish QM price make the lower low, lower high, lower low, lower high, right? This is, you know, that this is a break of structure, or BOS, break of structure, break of structure. Okay, this is the first or initial low. This is the lower low, and after that they make the higher low. So it's the right shoulder. Okay, it's quite straightforward, right? So now, to identify the QM pattern, okay, so I already say that, okay, if you see, yeah, of course, Okay, they will say that clear uptrend or downtrend in the market, find head and the shoulder formation. Look for the left shoulder head, the higher or the lower point, and the right shoulder forming. Identify the neckline break. Okay, price might break through the neckline level decisively. Wait for fair retreat or wait for the pullback. Okay, meaning that let's say this is gonna be the bearish QM, price make the high low, high low, right? To me, price have to break. This could be the potential the neckline here. This is the left, this is the head, right? Sometimes price gonna be pulled back somewhere around here and then falling. This is the right one, meaning that they need to break the neckline. Okay, forming. So you wait for price to pull back and then you sell. Because for the this is a QM. The head and shoulder are just like the left, the head, maybe the right shoulder here and then falling. Sometimes it may not even break the neckline. Okay, that's a different. Okay. We're gonna look that in the light chart together. So how to trade QM entry with the entry point. Let's say you are aggressive trader, you did not wait for the confirmation. Okay, enter at the fair retreat of the neckline with right shoulder. Higher risk but better risk and reward ratio. Require strong confirmation candle, meaning that this one you have to wait for the confirmation. Okay, like looks like price action or PA. Enter strategy 2 or like conservative entry. Wait for price to break the right shoulder high and low. Enter on a confirm break with volume. Okay, this one in case you are using volume to trade, but I personally don't use the volume. Okay, lower risk but reduce reward potential. Let's say, okay, we gonna look at the chart together. This is my gold. Okay. Of course, QM, right? QM. Yeah. Let's just say for the QM. Okay. Let's see if we can find the QM here. On it looks similar to like head and shoulder. Maybe gold is very hard to find the bullish. Like let's say, okay, I would say this. I'm gonna look for, because we need to find it. Okay. Support level. This not. Okay. Let's do an M15 here. Okay. Let's do an M15 here. So basically, we would say, okay, this is our, let's say this is our support level, or maybe like here. I'm gonna go on a high time frame to look if this is gonna be the support level and the H4. Okay. Okay, let's say this is support level, we have 61.8%. Okay. Now, on the lower time frame, we want to wait for confirmation. Okay. The thing is, from here, you see that price make the lower low, lower high, lower low, lower high, lower low, lower high, lower low, equal high, still lower low, right? Lower high, equal low. Okay, meaning that if price cannot close above this level, this is going to be the resistance. Okay, let's see. Boom. Price has break above. So now you need to wait for price to pull back. This may not very like beautiful QM, but I would say if this one is gonna be my left shoulder, which is here, left here, and this is the head, right? This is the head, and price have break the neckline here. So I'm gonna zoom to the M5 to have the closer look here. Okay, so if price pull back, maybe around this level, I'm gonna buy these zones. These zones, I'm gonna buy. Okay, meaning stop loss. This is my support level. We have and remember that this is our support. We have 61.8% fee. Okay, and if we're gonna go for the long position, if I'm gonna put somewhere here, target the recent high, and the stop loss I'm gonna put below, put here for the stop loss. Okay, right? Wait for price to pull back. Okay, meaning we might miss the entry, right? Because price, okay, from here, price just come to this. By right, you can just aim for this. I have highlight just now should be this zone. Okay, okay, correct. This zone to this zone, we have the demand. We have the demand here. So you can see the price is come to the zone here and then rising. And this one you identify at your right shoulder, right? You can see that, right? Pull back and go, correct? And the thing is, price have to break the neckline. You wait for price to pull back and then you buy. Okay. Either, okay, go on a higher time frame, right? This was the resistance level. You can aim here for the TP. Okay. It will take time. If you put here, you will hit your take profit. And then eventually it hit. From this one, let's say from the, it's about 230 pip for this entry. Okay, this is the bullish QM. Okay, this is a bullish QM. Let's find another entry for the bearish one, the bearish. Based on this, I would say this is the late QM, meaning it will take time for price to come to this level on the M15, right? On the M15, you will see that price had make the higher high, higher low, higher high, higher low, higher high, higher low, higher high, and make a lower low, meaning that they break this low. And then we say that, okay, we have the left here, we have the right shoulder. Now we're gonna wait for price to pull back, and this, you see that price had pulled back, and you can use Fibonacci and pull back where 61.8%. So this is your right shoulder here. Okay, right, they go back, and within the right shoulder you will see that you also have the supply zone. So they have a confluence here, supply zone, we have 61.8%, and then you can sell. First TP by right, you can target at the low, yeah, the recent low here. Or if you trade with the OB and then you said, okay, these are your demand zone, you can here target here for your TP1, right? And you want to sell from here, you hold from this let's just say 300 pip, right? 300 pip from here. Okay. Okay, and let's just look for another example of the there's so many strategy, but there's so many trader, they just stick with one strategy. Let's say they want to trade the QM, they just trade with the QM. Another one, EURUSD based on M15 right now from here, right? Price make the higher high, higher low, higher high, higher low, higher high, right? Lower low. So you see that price have broke here, the previous low. Okay, and then you already see that this is the left, this is the right, and you can see that this is the head, sorry, and this is the right shoulder. Okay, and you can see you can use Fibonacci 60 to 78.6. That's going to be your entry. This is going to be the zones. And you can see when price go in the zone, you will see the price action. You see the price action here, right? Price action, rejection, and then you hold. Okay, and now price have break the lower low. This is your break of structures. Okay, could be a TP1 from here to here, 24 pip, and then they also make the lower low, lower high, right? All the way here. Don't forget to look on the higher time frame. This is how it on the higher time frame. Why price is have the reversal here in H1? There might be the somewhere is an extension, or on the left is the resistance level. This is your resistance level. Yeah. Okay, in H1 time frame, you're gonna zoom here. This is the resistance level, right? Whenever price go to the resistance level, or may not even a hit, actually, where there is this one here on the left. Okay, at this wick, meaning if from this zone. Let's say if this is gonna be your supply zone, right? If you go to the like M15, and then you will see the reversal pattern, which is this. Price have broken the low. Okay, pull back, you wait for price to form the right shoulder, pull back here, and then you sell. Okay, guys. Okay, now gold. Okay, now gold is rising from the OB. Is this OB in the M5? Price was falling here and now is bounce off from this OB. Okay, this is the buy zone for this. And can we say that it might look like ranging right now? It might look like the ranging, but just now price was at this level falling. Okay, when we just start, it's about almost 100 pip, and now it's rising back again. So either here you mark out here is your ATH or all-time high. Okay, either they're gonna do like that. Maybe it could be M pattern, or if they break above this one, another resistance level that would be on the higher time frame, and then I'm gonna use the extension. Let's just say on H1. H1 would be here, extension 40, 90, and another one is the extension at this level. Okay, meaning this could be the first, the next resistance, this could be the second resistance level based on the extension. Okay. Let's say you're gonna wait for confirmation. Can we sell now? Can we sell now? Or can we sell right now? What do you think? Can we sell right now? If you ask me, high risk, price might go all the way to the might go all the way to 40, 90, another 100 pip, or they might reverse here, but just now it reversed here, it's about 100 pip, it's rising again, right? This is a support level for the M15, but just now price has bounced off from this OB. Okay, so high chance price gonna make another ATH within or this level. If you want to sell, I'm gonna give you this gonna be your sell zone from 85, like 79 or 85. That's gonna be your sell zones. Okay. And another pip, let's just say 100 pip. This is your sell. Okay, basically here's the sell zone. Okay, this is gonna be your sell zone. If you sell now small lot size, you have to ask yourself, if price is rising to this, can you layer in zone? If you can, take risk, you can sell. Okay, but to me, I'm gonna go to the lower time frame. I would say I just sell. Okay, these are up to you. Meaning that is it the M5 are gonna do the kind of like M pattern, or they're gonna maybe slightly M pattern, maybe go here and then falling, or they just make the ego high and then falling for the M5. Okay, so basically if I'm gonna chart here smaller side, I can hold up to above there 4,100. Okay, because nowadays I'll tell you it's really easy for gold to judge, for more than or like 50 pip or 100 pip. You can see that from here to here is almost 100 pip. So if you have very tight stop loss like 20 and 30 pip, I think right now it's different from like 5 years ago. Like 5 years ago or 4 years ago, right? Gold usually flying or falling is about 100 or 150. In like 250, that is quite a while. Why gold is like, move a lot. But nowadays, 100 pip is just, within 2 minutes or 5 minutes, 100 pip. Okay, that is so easy. Okay, so like totally different from like 5 years ago. So that's why if you throw nowadays, you should, manage your lot size, and you shouldn't have very tight stop loss unless price is at the key level. Okay, and then you have really like confirmation, those like price action like that, and then you can have really tight stop loss, and then you sell based on this, for example. And this one, I just say that, okay, in M50, in M5, I can take risk. I might think it might make the kind of M pattern. So I'll just sell. And my stop loss, if you think that, okay, I cannot put my stop loss so far, the first strategy, you put the stop loss slightly above the ATH all-time high. And second one, you can put stop loss above the race bar or above the extension. So it's up to you. Okay. That's why sometimes you just have to make up your mind. And now price has already falling. Okay. You see, it's less than 5 minutes, it's already 72 pip. 72 pip, you chop one lot is already $720. Okay, let's say you did not sell. Don't sell if you did not sell since here. You can wait for the buy entry to save entry, which is at this level. Okay, this is gonna be your pullback, right? Resistance, broken. We have the demand zone somewhere around here. So you can buy at this level. Now, back to the QM. We don't see the QM here yet. Okay, I only see like M pattern. The thing is they need to break below this either support level. If they break, and then that might be forming the equal high or M pattern, and this could pull back, and then you can sell. Meaning that if M5 is a support level, if price broke or close below, I will just give you the exact number, 70. You can sell. You can wait for the pullback, and then you sell, because this is a support level for M5. Okay, this level, you can see that there is a resistance and support bouncing off again, right? So it's less than, it's just like this is a 1 minute, it's just a 2 minute price falling 70 pip, and now it's rising again. So the thing is, it might be ranging either, okay, it look like that. I think it might be the ranging in the M5 like this to me. Okay, it might be the ranging right now. Here. Okay. Now it's ranging. Now it's very, very strong, like bounce from 72 to 76, almost 50 pip. If you also ask me, can I sell again? You can sell if you think that it's ranging, you can sell, and then your stop loss you have to be very tight. Okay, if they break, pull back from 40, 80, and then you can buy either one, buy, or break below, you sell. You can see they still buying, but it's M5. So basically, I think it's a range. Okay, if go back up again, I'm not gonna sell. I'm gonna wait. Either you sell here, TP, and you buy TP. If you want to sell again at the ranging, you can. You just have to make up your mind. Back to the QM in the M5 or M15. Let's go to the no, this is the another example. Let V move to another pair. Okay. this is not QM, right? Price did not fall to make the right shoulder, but we can go to the lower time frame. Okay. I would say this is the left, this is the head, and this is the right shoulder. The thing is, price has broken this level. Okay. And you can see that price pull back to the Fibonacci 67.8 and then you sell. Okay, because you can see this very market structures just from here, price make higher high, higher low, higher high, higher low, higher high, higher low, make a low, low high, lower low, lower high, right? This is a BOS right here. This is another breakout structures, right? And continue to go to the sideways, and this is the support level. This is support level in H4, right? Price was ranging, okay. And in weekly, sorry, in T1, you will see the demand here, right? But if you go to H4, rejection, you can see your price action here, but there is no QM here. Let me go to the lower time frame. Okay. M1, no, sorry, M1, no QM, right? Because not every time you will spot a QM. If you spot a QM, okay, good, and you can trade with the QM strategy. If not, you can just use the price action to confirm your entry, okay? Actually, if you trade the Forex or other instruments, right, keep things to the basics. If you don't see those kind of strategy, you look for the price action. To me, I trade with, can say like 95% with the price action. It can give you 95 accuracy if you identify or you find the key level correctly. Whenever price come to the level or to the zones, right? And then you see the price action, you can trade already. Especially with gold, okay, you will see a lot of the price action with the XAUSD, right? Okay, what is this? In H1, okay, price closing with H1. So now basically the box, remember, is a M5 sideways or ranging right now, right? You see that? So sell, you like scalping. If you still want to hold, you can hold. So now whenever you trade with a sideways or ranging market, you're gonna sell at the like at the upper and you buy at the lower. Whenever price is sideways here, you're not gonna buy out, you're not gonna sell. You say that, okay, I think you have the FOMO, and then you sell now. Okay, but sometimes price it might just pull back. And then pull back, and then maybe you're unlucky the day price have go back and break out of the box. Or sometimes you sell in the middle of like nowhere, price is falling, then it's lucky, okay? Because you're not going to like lucky all the time like that, but it's gonna make you become a bad habit. Because whenever you sell here, let's say price falling to here, okay, your mind going to register that you used to do this before, and then you earn, let's just say 1,000 from this because you're FOMO, right? And next time you sell again, but price may falling a little bit and it break out of the range here, for example, you're gonna get stop loss. And then the next time, what you're gonna remember, you only need to remember like the good things. which is, oh, I used to sell here, price falling. I have the feeling it's gonna fall. I need to sell again. You might get stop out. So try not to make it become the bad habit. You want to sell, wait here. You want to buy, wait here. If you buy here, let's say, then you're gonna have really tight stop loss. Remember, let's say if you buy, we trade the ranging. If you buy here, where your stop loss just below the range. If you see the body close, okay, then you just cut loss. If the price close below the box, okay, it's the same like if you buy here, if you sell here, stop loss just slightly above. If price close above, you just cut loss. Then you have really tight stop loss. But let's say if you just sell here and price rising, close out of the box, some of the trader, they still hold the sell entry, even though they know that, okay, price have breakout. But they said, okay, I'm gonna layer. I think I'm gonna wait for price to pull back. But sometimes it never pull back. It just all the way boom, like gold. Then you will get like, you don't cut loss, but your account gone, right? So now, if I want to trade, they're gonna buy here, I'm gonna sell here. So now what you're gonna do, you just have to wait. Okay, it seems if, let's say, if price close below the body, then you can wait for the pullback and then you sell. Okay, and then this one is gonna make the equal high, and then this one is gonna be the ATH at this level, which is all-time high. Okay. Right? You can see. Let me say, oh, why price is rejected? Because people like previous the ranging, they buy here at the OB. You say these are OB. That's why you see house. But how far they're gonna go, I don't know. Okay, this is just the M5. That's why when you see the OB and M5, you may not see like very strong rejection. But if you say that, okay, I can take risks, like I just mentioned, a lot of the trader, they like to trade with the ranging market. If they break, never mind, I got stop out. If I sell here, I have a tight stop loss. If I buy, price break below, I get stop out. It's okay. Okay, but usually when I see the ranging market, I trade 2 to 3 times and I just stop, because eventually they will break out either way. Okay, so now it's ranging. Let's just wait and see if they're gonna make this at the equal high or the M pattern. Our plan: close below the body, pull back, you sell, or close above, you buy or pull back. But look at the from the Asia or New York. This is gonna be Asia, right? My time zone. No, it was at 6:30 today. Where is my 6:30? It's what here. The low was here. Today I woke up, you know what time? My time zone, I woke up at 4:30 to do the pre-market. Okay, here. From here, today, let's just say 6 a.m. on my time zone, all the way to the high, let's just say 720 pip. As I said, nowadays you can see that it's just one all the way straight. Let's just say we will buy one lot, easily 7K, right? Now price gonna break. I think price gonna break. And now the Asia make another ATH, break of structure, break of structures. I think they might be a sideways now. Okay, let's say I want them to break. Then we can like wait for the pullback and then we sell. Okay, because this is gonna be the buy entry at least. I just give you the round number, 4060 to 4055. The zone for the buy entry. Now we go on the higher time frame. Look at the M15. It look quite promising to me that price gonna fall, or if price go back to the zone, to the OB here, I might sell it the pullback. My stop loss is gonna put at above the ATH. Okay, but based on the M5, I'm gonna look at the candle. The opening 74, closing, let's just say at 77, opening at 77 is the same. Closing 77, opening same price. Okay, meaning that you can see that price did not close above 40.78, let's just say. Now, if M15 price rising to this OB, we might consider to sell. Bearish OB for the M15. Stop loss, put above. Go to H1. Okay. H1 time frame. Now we're gonna read the candle. Okay, basically it's sideways right now. Even the M30 is sideways. Obvious on the M5. So okay, we don't trade. Okay, we don't trade. If you want to trade for the OB in M15, at least 50% and above is your entry. Or maybe like here, within the OB at 75, stop loss 81. If you want to sell. Okay, but basically it's sideways. Right? Buy here, sell here. Oof. What happened? Okay, guys. Anyone have the question? What is QM? QM, because you just joined, right? QM is a Quasimodo trading strategy. So basically, I'm gonna recap in here. It's a reversal pattern. You are joining late. We have a two type, or just a recap. We have a two type of QM. We have a bearish QM and bullish QM. This is okay. Recap. Price make the higher high, higher low, higher high, right? This at the resistance level. Price forming the the left shoulder, the head. Price have broken the recent low. You have a price to pull back to form the right shoulder, and then you sell. Okay, the same. Price make a lower low, lower high is the bearish. Okay, forming the initial low, and it's gonna be the head is lower low. Price have broken the previous high to make a new higher high. You will try to pull back to create the right shoulder, and then you buy. In this case, it looks similar to head and shoulder. Okay, but sometimes it's hunchback. It look like this character, the cartoon. The left, the head, and the right shoulder gonna be like this. Sometimes it's not like that. Sometimes like that. This is the left head. This should be right shoulder. But if head and shoulder, sometimes you will look like that. Okay, this is like head and shoulder. But QM, the right should be a bit higher, or sometimes the right, okay, should be higher, or could be lower. This is the left, the head, the right, as long as it's not close above the head. Okay, this is the left, the head, and the right shoulder. Need to break. All right. Any question, guys? Now we still have 10 minutes. Okay, anyone want to request? Anyone want to request? Okay, so basically it's sideways, yo. We just look at M5, it's sideways. Anybody want to request? It's quite straightforward. It's just that you need to wait for price to break the recent low. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low, break, pull back, maybe sometime here and then falling. This is the left shoulder, the head, and then you will apply to pull back to form the left shoulder. Okay, here. And then they will continue to make the lower high, lower low, lower high, lower low. And when it break, pull back. Sometimes maybe it's slightly here and rising, meaning that this is the left, the head, and the right shoulder, and the break. Sometimes it's maybe here, QM. Any questions? Okay, Q&A. And now, guys, you can request anybody. Okay, just now, some you guys just think for the SAR. You're talking about the parabolic SARs, is it? Right? We're talking about parabolic SARs, right? This one. Oh, he went off. Okay, I think he should be this. Super trade. Okay, any question or any last any instrument you want me to look for you? Okay, for gold right now, wait for price to break below 40.70, wait for pullback itself, or the break above or the body close above, let's just say 40.80, pull back and then you buy. Anyone want to request? If not, I'm gonna end the webinars. Anybody? Okay, someone request. Okay, let's say Bitcoin, Ethereum. Okay. BTC. Did you buy the BTC, guys, over the weekend or last week? BTC had falling all the way, to this level. You see that? This was the demand zone, right? You look at the H1 daily time frame. Okay. Oh, let me remove everything. Okay. Monthly time frame. Okay. This month, as long as price, the body cannot, or it did not close above this price, I'm gonna put exact the body. Let's just say 115K. Let's just say 115.7K. I'm gonna still buy at sell. For the BTC, remember, I will say that there is a divergence here, valid divergence. And then the weekly, I also spot the divergence as well, meaning that this is a bearish divergence versus the RSI. Okay. Okay. This is a monthly candle. This is ATH. the all-time high, right? This one was the support level. This was support level. Someone's suicide because of people. No. Wait. Someone suicide because of Bitcoin, but it was not more than 15%. Huh? What do you mean? Not more than 15%. Where? He lost money. Okay, I give you the key level first, right? This is going to be the demand zone for Bitcoin based on the weekly time frame, meaning that if price really close below, okay, like 100K, this is going to be demand zone for Bitcoin. Right now, I saw the divergence, so I think likely they will fall to this like support level. Let's go on the D1 time frame. Okay, for the D1 time frame here, okay, D1, this one is due to be our what? Bearish OB, right, guys? This is our bearish OB. Price broke. That's one. This one is gonna be our breaker box, meaning you're gonna sell here at about this level, and we could say that in line with our first resistance. Okay, this is my first resistance, and I have the breaker box here. Breaker box is just a failed OB. Okay, and this is my first support. Right, first support right here. And lower time frame, here's the ranging. Second resistance is right here. All right, now we go to H4. Okay, I'm gonna use the Fibonacci. And then you will see that 38.2, you can see the pullback 50%. Can we sell at the like, can we sell now? I mean, if I want to sell, can we sell? Then you need to go to the M15 to look for confirmation. Can I say price have broken this level? No, right? I mean they haven't really closed below this. They should make the like the higher lower high, but they haven't made the lower low. So I think you just have to wait for price to pull back to the zone and then you sell. Wait for the breaker box here, which is we have 50% fib support our analysis in the D1. Okay, we have the breaker box here. You sell. Okay, ETH. Okay, ETH price at the, you can sell though. This is a breaker. Breaker. Your sell zone is right now. Okay, I see the confirmation. I see the price action. Just sell within the zones, okay? Within the zone is our zone because it's your breaker box for D1, right? Oh, no, D1 is here. Okay, this is a fail OB, price boom. Now go back, you might see the rejection. So this is going to be the zones, okay? I give you the zone here. I was already highlight the zone for you guys. You just take note of this. This is a D1 time frame. Okay? D1 time frame. Meaning sell. Why I sell? This price have broken the low. These are breakout structures. Okay. No sell. Oh, okay. Okay, I go and read more. on that. All right, guys, so take note of this. All right, the key level, go back to the XAUSD again. Right now it's it's just raining, so better don't trade. Okay, no sale for Bitcoin. No sale for Bitcoin. Okay, so gold right now is ranging in M5. You can see that. Okay, now they make a new all-time high and then now it's ranging. So now we were to wait. It may not have the war room because today is a bank holiday in US, but anything is possible. Okay, it might be ranging, or maybe it might make another ATH or all-time high, or they falling, or they ranging until tomorrow. Okay, guys, that should be all for today. I'm gonna catch up with you again on next Monday. Okay. Okay, guys. Bye for now. All the best. Oh, okay. If you want to join my YouTube channel, this is gonna be YouTube channel. I'm gonna do the live trading on my own on Thursday and Friday. Usually during the maybe start from early London section, maybe pre-market for London section about 11. I think gonna start like 11 SGT, 11 a.m. Singapore time. Okay. If you go back to channel, you don't see anything because I hide my live streams. If you want to join this my channel, you can subscribe and then you will see notification. Okay. Don't worry, I'm not doing any IB or anything. Okay, just like share with you guys. I don't have the group. I don't have Telegram group. I don't have anything basically. Okay, just in case you want to trade together with me, you can join or subscribe to my channel. All right, guys, that should be all for today. See you next Monday. All the best and good luck. Bye, guys. Take care. Bye bye.